Our next guest also has a lot of operational expertise and knows a thing or two about building mines. He's done it a few times in his career. We're going to be joined now by Matt Manson from Marathon Gold. Now, Marathon's developing its Valentine Gold project in the very hot Newfoundland region. My God, I can't believe I made that mistake as someone that was an honorary member of St. John's community for a couple of months there back in my youth. Anyway, they're taking Valentine Gold project into production, and they have the leader to do it, that's for sure. So Matt Manson is president and CEO. He has over 25 years in mining exploration, project development, construction, and operation. Now, Valentine would be the third mine development project that Matt's been involved in, as he was previously president and CEO of Stornoway Diamond, where he had led the almost $1 billion project financing for the Renard Diamond Mine in north central Quebec, and he oversaw successful construction and ramp up. And for that work, he was named the Northern Miners Mining Person of the Year back in 2017. Now, prior to Stornoway, he was at Aber Diamond, where he participated in the $230 million project financing for the Diavik Diamond Mine. He oversaw Aber's technical and marketing operations. In addition to being Mining Person of the Year, he's also won PDAC's Viola McMillan Award, and in 2015, Ernst & Young's Entrepreneur of the Year. He's a graduate of Edinburgh in geophysics and the University of Toronto, where he has his PhD in geology. Matt, wonderful to see you. How are you keeping, and where are you joining us from today?
I'm in sunny Newfoundland. I'm in our office in Grand Falls, Windsor, in central region of Newfoundland.
Fantastic. It's a beautiful spot of the world to be in. Listen, I'll pass it over to you, Matt, and you have our undivided attention. We'll follow up at the end with some questions.
Thanks very much, and thanks for having us. And thanks for reading my whole bio there. It's
a good bio,
This is my
Matt.
third mine. I'm happy to say that the first two are still operating and producing diamonds and making lots of money right now in the current diamond price environment. So looking for a third success here with the Valentine Gold project. So hopefully you can see my screen and my slides.
Yes, we can, Matt. You're good.
So here's the headline for Marathon, the Valentine Gold project in central Newfoundland. It's the largest project, largest gold resource in Atlantic Canada. It will be Atlantic Canada's biggest gold mine. It's a pretty high profile project as Canadian gold development projects go. It's well known for its elements of simplicity. You know, this is, people know Newfoundland. It's a good jurisdiction to build a resource business. You know, we're not at the top of a mountain somewhere or up in the high Arctic or, in a national park somewhere. This is crown land at the end of a road with hydroelectric power, open pit mining, conventional milling, bread and butter mining in central Newfoundland. Feasibility was done last year, and it's a low initial capital, high rate of return project. And we'll talk about the numbers a little bit coming up. We're just coming to the end of what will be a 3-year environmental assessment process. We'll talk about that. We're now, the engines are turning in terms of the construction mobilization, and we expect to be on the ground, breaking ground with shovels in the third quarter of this year. We'll talk about that. This company is committed to building this project. That's the mission. A lot of work on the ground here in Newfoundland in terms of communities, people, First Nations, and very much this company and this project is known for the ongoing exploration. We have continued to explore as we've gone through this environmental and mine design process with success, and we'll talk about that a little bit. So I always talk about the 3 legs of the stool for Marathon. It is exploration, it's continued growth, lots of geologic potential here, lots of ounces to come in this project. I do feel we're just getting started in terms of the exploration. Permitting has really been a schedule driver for us and the principal news driver for us for some time now, coming to the end of the process there. And project development, it's team building, it's early works, it's incorporating the construction environment right now, inflationary environment, volatility in supply chains. We'll talk about that a little bit. Project financing, project execution. Those are the 3 legs of our stool. This is where we are. Central region of Newfoundland is the source of the hottest gold exploration activity in the world right now. All the grey are the claims that were staked as of about February. I think that map's dated. It's probably more now. I like to think that Marathon has been is the leading wave on this. We are the first project of this generation of activity to be permitted and built and to go into production. And it's also the biggest of all the projects that are currently being assessed. But lots of exploration dollars being spent, and there'll be lots of good discoveries made with all this surge of activity. Again, end of a road, Star Lake generating station about 30 kilometers away, so hydroelectric power we're tapping into. An image of the site there. It's not a hardship posting to be building a mine in central Newfoundland. So the next few slides animate through and show you what this project is. So the mineralization is on a trend adjacent to a large crustal structure. And what you're seeing there is from Verify. You can go onto our website and go in here and you can fly around and navigate this kind of stuff. There is Valentine Lake just to the north. There's the Victoria Reservoir just to the south of us. Two resources right now in the Leprechaun ore body and the Marathon ore body. These are quartz tourmaline pyrite veins of the centimeter to meter scale that have been bulked up. It's the infilling of a brittle deformation in a Precambrian granitoid rock, and the bulking up of these veins within this deformation, it composes the bulk mineable mineral resource. A little bit different than the setting of other deposits in Newfoundland, which are high grade within narrow crustal structures. We've got a large bulk tonnage resource here that bulks up with many tens of millions of tons at about 1.7, 1.8 gram per ton average grade. So about 1.3 million ounces on the left of the Leprechaun deposit currently, about 2.7 in the Marathon deposit, all categories. That's about 4.8 total resource inventory. That makes it the biggest in Atlantic Canada. Berry in the middle was the growth project. And the two pits in the mine plan currently are based upon Leprechaun and Marathon. But what you're seeing there are individual drill traces, and the yellow is resource grade gold. So you see where the growth is coming from here, right in the middle there with Berry. You overlay the mine facilities. So those two pits are 6 kilometers apart. We don't have Berry in the mine plan. That's the exploration location. We're just focused on the initial mine plan in Leprechaun and Marathon. That's the reserve in the pits. There's the central mill, the tailings, the waste rock piles, the roads, and the camp. And there's some headline numbers on the feasibility. So 2.5 to 4 million ton a year mill, hydropower, 300-person camp, 13-year initial mine life. That's 173,000 ounces for the first 9 years of that. Again, the exploration is about extending that out. The initial capex last year was 305. That will have gone up, and we'll be bringing out a new technical report in the fall that's going to show you the impact of all of this exploration, the new mineral resource, and also a new production schedule and a new cost profile for this thing. But as of last year, 305 initial capital, 833 AISC, 600 million NAV, 31.5% IRR after tax at $1,500 gold. So that's the low capital, high rate of return, good economics profile of this project. Makes it one of the best in Canada. So this is what we've been focused on as a company for the last 2 years. This is a complicated slide that shows you the steps of the environmental assessment process for modern mining in Canada. All the dark blue bars and triangles is work completed. The open white symbols is work to be completed. So you see there's one diamond left, one triangle left, and that is final federal environmental assessment release. We had a big moment in March when we got completion of the technical review process of the environmental assessment in the province, and in the same day we got provincial cabinet approval. So we're good to go provincially, and the specific permitting process that governs specific site activities has already begun in support of breaking ground in the third quarter. What's outstanding is the final federal release. We got completion of the federal technical review process also in March, and sorry, I've got someone coming in my office here. We got the final completion of that in March, and then what's remaining now is the publication of a EA review report by the federal government that we expect to happen very, very shortly. That goes out for public comment for 30 days, at the end of which the environment minister is in a position to say yea or nay. So the regulatory clock of that gives us an expectation of having final green light permits in hand in the third quarter, and that's when shovels go in the ground, and that supports the construction process for the rest of this year into 23, 24, completion of the project end of 24. For us, in terms of the ground, it's communities, it's First Nations, it's environmental protection stakeholders. So the 6 central Newfoundland communities that we're very engaged with: Buckins Junction, Middletown, Bishops Falls, Badger, Grand Falls, Windsor, and we're having meetings with all those councils and mayors this week. Actually, that's why I'm in Newfoundland for the week. First Nations means the Halapu and the Mwapageg, the Mi'kmaq First Nations. We've got agreements and we're engaged with them. And then with environmental protection and stakeholders, it's very much for us, it's caribou protection, which I think we're in a very good place with monitoring plans and agreements in place with the Outfitters Association and with the provincial government. So a lot of work has gone on here to have a successful modern mining project. So I want to finish this off just talking about exploration. We're still exploring. We did 74,000 meters last year, focused on the Berry deposit, but also now the Victory deposit, which is along the trend that I was talking about previously. There is the property. We've got about 22 kilometers of prospective ground here along that Valentine Lake shear zone contact. We've really only explored, I'd say, 6 to 8 of that with good coverage. So a lot more work to happen here. We also did last year an RC program. We were testing the quality of the resource that we already have in advance of making a construction decision and putting this thing into production, with a view to being the people who were around when the first gold bar is poured and we're reconciling the resource. We want to have the quality stress testing work done now rather than then. And then this year, 50,000 meters was approved at the beginning of the year. Again, very much focused on Berry, Victory, and grassroots discovery up in an area that we call Round the Bend, up to the north of the property and off the eastern parts of the property, which has never really been explored. So growth is still going on here. And this is what Berry looks like. I talked about the fact that we're bulking up a mineral resource here. We're not chasing individual veins, we're bulking up on a volume basis. And we communicate that by showing these long sections of resource grade intercepts on our drilling. And you know, the thick red color that comes out, that's about 100,000 meters of drilling now into Berry, is communicating that bulking up. And some of the intercepts that we can put out in our exploration press releases, you know, 2, 3, 4 grams over 20, 30, 40, 60, up to 120 meters. That's us drilling through these stacked and bulked up vein systems. So the Berry work's going into a new mineral resource update that will be out about mid-year. Will also be soon now. And that's going to bring in Leprechaun, Marathon, and Berry and present a new resource picture for all 3 of those pits or potential pits within that central part of the property. So we've guided already that we expect that to be a meaningful exercise in terms of the amounts of open pitable M&I resources we've got here. And then that's what's going to go into this new technical report in the fall that will show you the impact of all those extra ounces of gold. This is something we're very proud of. This is the RC drill program that we ran last year. This is all about, again, validating the resource, demonstrating the continuity of mineralization. Are these veins continuous on the scale that we expect them to be? Can we mine them with our equipment in the pit? So very quickly, what you're seeing here, we published this already, is a plan view on the left of some diamond drill holes that were about 25 meters apart. They hit veining. They were used to propagate blocks, that are the solid colors. And then we drilled vertical RC holes on a 6-meter grid. That's our SMU for mining, to test whether or not the mineralization was continuous between the diamond drill holes. And the good news is on every section, on every RC hole, it was. And it was with very good grades. And those lollipop kind of colors there are 2-meter RC samples. And the blocks represent the thicker area blocks that your algorithm creates when it creates 6-meter blocks that are spread out and diluted down. So that's an almost perfect result. We call this our postage stamp test. That was over a 40 by 50 meter area where we demonstrated that this is a mineable ore body. So very few companies of our stage, single asset junior companies, will go to the extent of doing this type of work and to demonstrate the mineable attributes of the ore body before you've actually built the mine and you're mining the ore body. So I think this is something everyone should do, and you know, we're happy to have done it, and we were very happy to see these results in this particular test area. So finishing up, what can you expect from us? Well, you know, federal EA completion, the final green light on the permits and the approvals very shortly, starting early works at site upon that. But at the same time, as well as doing the heavy lifting of mine construction and starting that in the 3rd quarter, we're going to be bringing out this new resource update, this new technical report that shows you all the swings and roundabouts in our business over the last year and a half, which is you know, different resource, different mine plan, different cost environment, locked in schedule. And we're doing that because it's going to be a meaningful thing for us to do in this project. And then, construction during 23, first gold pour end of 24, 13-year mine life, and then an extension of the mine life from the exploration. And then in terms of the balance sheet, $72 million in the bank at the end of March, which is a good platform for us to be getting started and doing the work we have to do now. We closed our debt deal at the end of March with Sprott Resource Lending, 185 million US. Being beaten up in the market like everybody else right now, but heads down, focused on the job at hand. 11 sell-side analysts with 11 buys between 325 and 570 targets. And a good shareholder register of institutional shareholders in support of the company and the project and the work to come. So that's me, Anthony. Thanks very much.
Excellent, Matt. Excellent presentation as always. First one, I led off the show talking about inflation and how that's a potential for an investment case for our industry, but you're also building a mine at an inflationary time. So talk us through how we are up against the clock. So in a nutshell, how are you managing? Are you seeing much inflation into your CapEx? And how are you managing that?
Yeah, we guided about a month ago that we were seeing upwards of 20% on individual CapEx and OpEx items. And if you're running a model on us, you should be taking our feasibility numbers from last year and risk adjusting them, between 15 and 20%. Our initial capital of 305 will be a little bit higher than that range when we lock it in our control budget, which is going to be the budget tied to the updated technical report in the fall. But that's because we're also moving some sustaining capital items forward in our budgeting, and so we'll end up with a different number there. But about a 15 to 20% inflationary hit sort of across the board is really what we're seeing and what we're hearing other people seeing as well. But I'll stress that this is a low capital intensity project. I mean, it was 305 in the feasibility. So in absolute dollar terms, we're very happy to be working with that profile of project. High rate of return, low initial capital. This isn't $1 billion project that where in absolute dollar terms, inflation kind of really whacks you. What we're seeing in our situation, what we're seeing is manageable.
Okay. Barry, I mean, I know you got to be careful. I got to be careful with this question, but you're going to have the release in the fall. Can you tell us what you're targeting for Barry? I mean, trying to get investors a sense of how big Barry could potentially be.
Yeah, what we've said is, Leprechaun is about 1.2 million ounces in the resource and about 850 million ounces in the reserve in the open pit. And so we've been sort of saying that that's the exploration target for Barry, something similar. The geological attributes of Barry are similar to Leprechaun. The presentation of the mineralization is similar to Leprechaun. So that's what we've been saying about Barry. It's not guidance. That's just what the target is as explorationists when you set out to try and achieve something. I think if we get upwards of 800,000 ounces added to this ultimate mine plan. Of course, Barry not permitted. Leprechaun and Marathon are the two that are in the environmental assessment are about to be permitted. So we're talking about the future here. But that's a very meaningful contribution to this project, and it's sitting right beside the mill. Right, it's literally a stone's throw from the mill. Everybody wants to discover an ore body beside the mill, and we did. Right, it's terrific. So behooves us to sort of do all the work, drill it out, get it worked out, get it into the mine plan, ultimately get it permitted, because it's right there. But that's how you should think about it, right? And for a project that's doing 170,000 ounces a year, that's quite a considerable addition to the mine life.
Oh, no doubt about it. Yeah, that really jumps out when you show the 3D mapping where Barry sits. It is quite literally right on the doorstep of the future mill. One from the audience about more of that long-term kind of vision. I mean, you get the mine up and built. What's your long-term plan here? Do you want to build Marathon into the next Kirkland Lake, Agnico? Will you look at assets outside of Newfoundland and outside of Canada?
Well, I think we get asked that question all the time, and we're on everybody's kind of potential kind of M&A list as well, so we're told. So for us, we're completely ecumenical about that, right? We want to have a success here. So a success could be building this thing ourselves, putting it into production, have it be a company making asset for Marathon, or it could be doing something else with it, right? Our day-to-day work here in the company is the same in either situation. But for us or for anybody, this is a cornerstone asset, right? Good production profile, good jurisdiction, simple risk profile in terms of the mining and the metallurgy and the processing. Lots of exploration upside to extend the mine life. I mean, this is a fantastic asset, and we intend to build it until we're obliged not to.
Excellent. All right, Matt, we're going to leave it there. Thank you so much for joining us. You have a big year ahead of you. Enjoy the rest of the week up in Newfoundland, and continued success to you.
Thanks very much, man.
Thanks, Matt. Take care.